now going to face the quarterly scrutiny of analysts, journalists, business channels. Is this something that you wanted to push down the road, the IPO, or is this something that you're comfortable with?
One can always wait, but a little bit like marriage, there's never a perfect time. So if you feel it's right, you go for it.
Where did the kernel of this idea come from?
I think the kernel of the idea was certainly personal experiences. I was trying to get a carpentry job done, and 3 carpenters, and 24 hours later, the job was still unfinished. I could not imagine a future 10, 15, 20 years out where this continued to be such a broken industry.
There is going to be negative feedback as well, very front and center out there. It's not just InstaHelp. The name of the company also.
Yeah.
Why did you go from Clap to company?
You probably don't get the name first time right. It's my sort of hindsight learning. But on a serious note, Clap has a slightly negative connotation in the English dictionary.
So what next now in terms of categories? What do you have in mind?
2 new bets that we're very excited by is InstaHelp and Native. In the first few days of launch, our waitlist went into several hundreds of thousands of consumers.
I'm on the wait list.
You're on the wait list.
Welcome to this very special episode of The Disruptor. Now, when we look at who we want to speak to on this show, sometimes we have to think about whether this person or this company or this idea has actually disrupted the space. With my guest today, I think it's a no-brainer. No one will really believe that life hasn't changed after a service came in where you could get a plumber, an electrician, a beauty service on an app. And Abhiraj Singh Bahl is one of the 3 people that's made it happen. Thank you so much, Abhiraj, for speaking with us today.
Thank you, Tamanna. Thank you for having me.
And this is an exciting time because you are now going to face the quarterly scrutiny of analysts, journalists, business channels, all of us looking at what your numbers are stacking up to be. Is this something that you wanted to push down the road, the IPO, or is this something that you're comfortable with?
I would say it's been 10 years since we started. So, it's a good time. One can always wait, but a little bit like marriage, there's never a perfect time. So if you feel it's right, you go for it. And we felt we were ready. We felt we had the scale, the profitability, enough growth ahead, the right governance. We've had an independent board for a while. So, as good a time as ever.
I dare say exiting from investor scrutiny might be more difficult than exiting from a marriage, since that's the analogy you started with, because then that is something that you have to get used to. Yeah. Nevertheless, let's start at the beginning. 2014, Urban Clap comes to life after one attempt that didn't quite go as you wanted. The biggest transition actually for a lot of people that I speak to on this show is from that steady job to the entrepreneur. It's a mindset shift, isn't it?
It is. I think the paycheck stops hitting the bank account every month. And especially if your first idea or first startup doesn't work out, which in our case was true.
What was the idea?
Well, we were building a company that was trying to provide entertainment solutions in long-haul travel. So buses and over time, hopefully trains and planes. The thesis we had was that, these journeys are very boring and disconnected, and therefore any kind of entertainment solution could be a very large market. We didn't get too far in that idea. Very quickly we realized that both the market is very small and, there was very little traction. So we built a product, but when we put it out there in the market, it didn't really succeed. And it was a good lesson for us to actually, sometimes I feel like first ideas are sort of a rite of passage, to go on to eventually build what you are destined to build. You have to get past that first, rather naive idea.
So where did the kernel of this idea come from? Was it through personal experience where, sometimes you're just waiting for a technician or an electrician to turn up and you don't know where to go? Or was this something that was workshopped? Where did the kernel of the idea come from?
I think the kernel of the idea was certainly personal experiences. I think all three of us had um, a few experiences that had gone wrong. I can talk about one where I was trying to get a carpentry job done, and 3 carpenters, and 24 hours later, the job was still unfinished. And when we started to compare notes with ourselves, with a lot of consumers back then, you know, we were talking to a lot of consumers, we were spending time in the market. Um, this was coming up as a recurrent theme that, getting reliable services at home um, is not a solved problem. It is a challenge. Our assumption was that this is because the industry lacks professionalism, and the industry lacks standards, which is true. But when we delve deeper into the supply side, into our service professionals, and spoke to several of them, we realized that it is not lack of wanting, it is lack of opportunity that has held them back, and one of the reasons why the industry is unorganized. Service professionals we spoke to did not have direct access to end consumers. They did not have an opportunity to upskill themselves, move up in their career trajectory. They were sharing their margins with middlemen and local aggregators and local thekedars and local contractors. And most of them were living sort of very, very lower middle class, hand to mouth existence. So it became quite evident to us that here was a fairly large category where both sides were broken. The consumer was not getting the quality and reliability they wanted, and the service professionals were not getting a dignified, respectful middle class life. Like, I could not imagine a future 10, 15, 20 years out where this continued to be such a broken industry and such an unsolved problem.
You know, what is actually very surprising is that no one else is doing it. It's not necessarily the highest moat. And is this the question you've asked yourself? What your business does and what your company does is not the highest moat in the world. Uh, why is nobody else doing it? I mean, maybe in bits and parts. So for Insta Help, you will have a Snabbit or whatever, but not really. No one else is going through that full stack kind of a service, tech backed service oriented business. Why do you think that is?
I think, as you rightly said, Tamana, there are vertical players. So I do think across different verticals, you will see both online and offline competition, and meaningful competition that we don't take lightly. Um, Competition that in some cases has innovated as well. And we respect them and we look up to them and we learn from them. But yes, if you were to talk about an online full stack platform that straddles across categories, um, there are few and far between. We would have fairly large market share in that segment.
I can't even think of anyone else who does it. Is there anyone else who's doing as many categories as you are?
Probably not, but look, we also think this industry is still early.
Okay.
We think that it will evolve. And we don't take our market leadership for granted at all. We recognize that the only way for us to continue to be market leaders and grow the industry significantly rather than protect whatever little share of the offline market that we have, is to innovate, is to stay ahead of the curve, is to invest behind training, technology, tooling, just continue to delight consumers and stay hopefully one step ahead of their expectations.
Okay. So let me go back to the kernel of the idea.
Yeah.
This was one of many on the drawing board.
We had 4 ideas on that list that
Okay.
we explored. 3 of them have gone on to become pretty large. So this was the first one, and the one that all 3 of us felt very strongly about. We also wrote food delivery, grocery delivery, and subscription commerce. And food and grocery went on to become pretty large as well. So food, I think,
talk about roll of the dice.
So look, I think grocery, I was like, I went to Azadpur Mandi one day and I'm like, okay, this is not me.
Yeah. Where did the initial capital come from? What was that journey and process like?
The three of us as founders, we committed capital from our personal savings. Lasted us about a year or so. So we started in 2014, and then I think 2015, early 2015, we realized that okay, the space is heating up, and it's going to take like meaningful investment. So we should raise capital. We met Elevation Capital at that time, and back then it was called SEF Partners. They've changed their name, and so have we. They really liked us, and we really liked them. And I think within a few days, they gave us a term sheet.
So it was easy peasy.
No, it was not very easy, but I would not say it was like super hard either.
Yeah. No, because I've spoken to people who went to 100 meetings, pitch meetings, and get thrown out.
I think we'd done about 10 to 15.
Yeah.
Yeah, up at that point in time, and we had converted a couple, Axel and Elevation. There were one or two more who were interested, but at lower valuations. So I think these two, Axel and Elevation, I think were sort of very, very keen, and we found, it's very important that your first investors, there is strong chemistry with.
Now we're talking 10 years later. Is this all a fairy tale from there on?
No, it's, as with any journey, there are going to be lots of ups and downs. I would say the 2 or 3 most defining moments for us were, the first would be around 2017. We started Tamanna with not the same model that we have today. Today we have a full stack, vertically integrated, tightly managed model, but we had started with a more asset light touch, tech only platform. And very soon,
in simple terms, that means you just a platform where the consumer and the service provider come together,
and we are just connecting the dots, right? Providing some background checks, some tools, etc., but not really owning the service delivery. A year into building Urban Company, we realized that is probably not going to work. Services is a very, very non-standard use case, and unless you go deep and get your hands dirty and do the whole 9 yards of quality control and training, customers will have a hit or miss experience and they won't repeat. So we started to build one category in a full stack fashion, which was beauty services for women. That was our first category. And the rest of the platform, we continued to grow as the connecting the dots platform. Beauty started to do very well. Consumers started to repeat on our platform. Service professionals were organically joining the platform. And by 2016 end, which is about 2 years into our journey, even though we had like a bunch of different categories on the platform, we started getting known as a beauty app. So we realized that, okay, this is what product market fit really looks like. Organic customer traction and organic service professional love. However, we had scaled up the rest of the platform in the interim. We had raised a bunch of venture capital, almost $35-40 million up until then. And the revenue stream from the rest of the business had also become meaningfully sizable, because when you're a connections platform, it's actually easy to scale and get to some scale quickly. So in 2017, I mean, we really were at a crossroads. We could not continue to build both businesses together. It was not possible.
Beauty and?
The full stack business, starting with beauty.
Yeah.
And the, call it the lead gen or the open marketplace business, where we were only connecting.
Okay.
So we had to take a call. And we took the call to shut the open marketplace business, which at that time was 50% of our revenue.
Oh, so that's a tough call.
Very tough call. But thankfully it paid off. I mean, the full stack business started doing well, started growing very well.
Is beauty still the biggest revenue contributor?
One of the biggest, yes, one of the biggest.
What would be the sort of ranking? To give
I
us
would
a
say
sense?
there are a few categories that do well on our platform. Cleaning is certainly one of them. Beauty is the other. All kinds of AC and appliance repairs is the third. basic handyman services, electricals, plumbing, carpentry also does well. And off late, we've launched this new service called InstaHelp, which is a house help on demand service that started to do very well.
You changed the name.
We did. We got some feedback, and we are receptive to feedback as a company. So we took it and we changed the name.
Yeah, because maid was not seen as the.
I think it was not. I think we look. One of the things we do is not just create a platform, right? We are trying to empower service professionals to lead a better life.
Absolutely, and I'll come to that bit, but just focus on the name change, not just InstaHelp, the name of the company also.
Yeah.
Why did you go from Clap to company?
I think we probably don't get the name first time right. It's my sort of hindsight learning. But on a serious note, look, Clap has a slightly negative connotation in the English dictionary. And as we were expanding overseas and also becoming bigger in India, we felt that we needed a name that is more in line with our vision, with the kind of impact we are trying to create for our service professionals, and builds trust with our consumers. So I think that change was inevitable. Insta Maids to InstaHelp. Again, I think we underestimated the connotation that the word maid carries, and it does carry a slightly derogatory connotation. I think when our consumers told us that, look, we think of you as a platform that is trying to champion dignity of labor, and this is not a word that will age well. And
also a world of social media where 100 views, is that something also that you've learned to grapple with as an entrepreneur, that at the end of the day, when you are effectively a service provider of so many people and so many kind of services, there is going to be negative feedback as well, very front and center out there?
Yes, I think, look, feedback in a customer service business is paramount. You have to take every feedback the right way, the constructive way, and try to pattern recognize. And if there is, a recurring feedback that is coming to you, it means that rather than solving for that particular instance, you have to step back and say, okay, this aspect of my business requires deeper capability building.
You've talked about championing the rights, and I think not the rights, but the lives of people and gig workers and giving employment opportunity, truly. You've mentioned that a couple of times. Even while you're doing that, there have been a lot of, there has been some pushback, some scrutiny that you faced, and a lot of these groups of people saying that they don't really want to pay that much commission, or they don't like the terms of reference, etc., etc. Can you give us a sense whether that is an ongoing issue that you have to deal with?
Great question, and very happy to have the opportunity to talk about this. So, Tamanna, service professional enablement and empowerment, we feel, is at the heart of our company. And we really look at this in 4 simple pillars. Middle class earnings, not just minimum wage, but a living wage, and I'll talk about that. Social security, training and upskilling, and social protection programs. And if you allow me a couple of minutes, I'll talk about each of this.
Okay.
We are perhaps the only company in the gig economy today, in India and potentially across the world, that has been transparently publishing the earnings of its gig workers for the past 4 years. The average professional on the Urban Company platform in FY25, and these are audited earnings in our DRHP and RHP on our website, made 26,400 rupees net of all costs per month in FY25, all by doing about 83 hours of work on the platform. Somebody who did more full-time work, which is about 140 to 150 hours, roughly representing 7 to 8 hours of working in a day, assuming 22 working days, ended up making between 45 to 50,000 rupees net. The second is social security. We offer a free life and accidental insurance cover to every professional worth 10 lakhs and a health insurance cover worth 1 lakh to all our professionals, free of cost. The third is training. training is a big area of investment for us. And since inception, we would have trained more than 100,000 gig workers.
Sure. There's no doubt that you're doing a lot and you've given people a lot of opportunity. I'm not denying that.
Yeah.
I'm saying that there are still a whole host of people that work with you that have a lot of complaints. Now, you, as a company that will now see shareholder scrutiny as well, I'm just trying to understand if this is a persistent problem that you see, or these are issues that are getting solved over time.
Oh, definitely there are issues that are getting solved over time. See, I think we are always open to feedback. And as and when we hear that feedback from service professionals, we work on it. Um, by and large, professionals are very satisfied. And that is evident in our very, very low industry beating churn rates.
Will commissions have to go up eventually to maintain profitability? Because then now that's a key indicator. I think last 2 quarters have been net in the black, but you are going to now have to maintain and scale it up. I think Q1 you saw a bit of a dip for this financial year.
In any micro market, as we densify the micro market and as service professionals and customers, the activity increases, the utilization of our service professionals increases. Today, that utilization is only about 40-45%.
Okay.
So rather than taking more commissions and trying to split the pie, that is there today, our goal is to grow the pie. Our goal is to over time take that utilization from 40-45% to 65-70-75%. So our focus continues to be to densify and bring down the systemic costs. And we always eat last. So any benefits of densification will first be enjoyed by professionals and customers and last by us.
Are you worried you're going to have to change that mindset? I'm just saying it from an entrepreneur who is growing a business to now an entrepreneur who has to answer to shareholders once every 3 months. Can you continue to always eat last?
Yes, I think our core business enjoys very, very healthy gross margins and contribution margins.
Can you share any
Absolutely.
details there?
So we have a 56% contribution margin profile on our net revenue, which means that theoretically, if we hold our fixed costs, for every dollar of incremental revenue that comes to the platform, 56 cents will flow to the EBITDA. Now let's try to scrutinize this for the last 3 years. FY22, my net revenue was 437 crores. And the business had a loss of minus 374 crores. So 374 crores of operating EBITDA loss. From FY22 to FY25, the top line grew from 437.6 to 1144.5. So about a 707 crores of top line growth. The bottom line moved from minus 374 to plus 12, which is about 386 crores of operating EBITDA gain. So of the 707 incremental revenue that we added, 386 went to the bottom line. This is about a 55% conversion, in line with that 56% contribution margin that we spoke about. Fixed costs largely remain fixed because we had forward invested in areas like training, like brand building, like technology, and they didn't necessarily scale with top line. Not to say that they will always remain fixed. We will continue to build on technology. We've raised 472 crores to invest in technology, to invest in brand building. But I don't expect them to scale linearly with top line. They will continue to scale slower than top line, which means all that additional benefit of operating leverage with scale will continue to flow to the bottom line, and our margin profile will continue to improve. Scale in our kind of business is a friend.
Okay, so not too difficult to hit healthy profits and keep there.
As long as we grow and we grow well, I think it should, in our business, it's not like growth and profitability go together rather than at the cost of each other. Let me put it that way.
Okay. So what next now in terms of categories? What do you have in mind? Because you have to keep growing and you'll hit a ceiling there as well, or is there much more to go?
No, I think two new bets that we're very excited by is InstaHelp and Native. InstaHelp is our foray into everyday house help services. We have started with an on-demand house help service where within 15 to 30 minutes you can get somebody at your doorstep. People are using this whenever their um, regular house help is on leave, and some people are using it as the house help. So very excited by it. It's growing very rapidly.
What is the kind of initial demand?
I think in the first few days of launch, our waitlist went into several hundreds of thousands of consumers.
I'm on the wait list, by the way.
You're on the wait list. Our apologies. We're working hard to launch more and more micro markets. It's been growing very rapidly. It's just been quite crazy, I would say, to keep pace with the demand. It's also a service that, unlike the rest of our platform, which is, more like a monthly use case, this is one that, allows you to touch base with the consumer multiple times a month. It's more high frequency. Native is the second. It's our foray into smart water purifiers and smart electronic door locks.
Why though? I mean, you're so service oriented. Why do you want to start selling a product?
Yeah. No, we've been asked this question quite a bit. Let me talk about water purifiers, which is about 90 to 95% of the revenue. So we first started this category from a servicing and repair perspective about 8-9 years back. 5-6 years back, we entered into spare parts, like our own branded private label spare parts, the filters, etc. And we were constantly hearing from consumers that why is it that my water purifier needs continuous filter change and AMC and maintenance and repair every few months? Why can't you just give me a water purifier that just works and you don't need to change anything for some time?
Counterintuitive, now, when you want to make money from the servicing as well.
Yeah, we are not a servicing company.
Right.
We're a consumer company.
Okay.
We are very, very clear about that. Like, we don't think of ourselves as a service company. It took us a good part of 2022 and 2023 to work on it, do the R&D, product development. But by October 23, we were ready. We launched this state-of-the-art, beautiful, it's really well designed water purifier. It's growing very well. The full year last year, it did 116 crores in net revenue. In the first quarter alone, it did 60 crores.
Will you add on more products as and when?
It can't be a random product that we add. It has to be synergistic with our platform. It has to be synergistic with our services. And, it has to be synergistic with the vision we have to create a home platform for the consumer.
Okay. So much more to look forward to. Abhiraj, it's been an absolute pleasure. Thank you so much for opening up to us and speaking with us.
Thank you so much, Samantha, for having me.